Utah, is it a lien or is it a deed? We're going to discover that in this video. Have you ever wondered how you can tap into not just the beauty of Utah, but the profitability of Utah? Guess what? We're going to cover that in this video. In this video, we're going to show you step by step how to take advantage of this beautiful state, Utah. And if you haven't been to Utah, oh my goodness, it's absolutely gorgeous. We're going to show you all the different ways to make money in this video. And if you stick around to the very end, I've got a little surprise. Their bidding method is a little different. So stick around, and in this video, we'll show you how to capitalize and make money for you and your family. First of all, let's recap. Okay, we've got tax liens and tax deeds here in the United States. It's kind of equal. About half the states offer tax liens and half the states offer tax deeds. So let's look at what's better. I don't know, it depends on who you are. In my opinion, if I was setting up a brand new state and I said I need to establish how the counties are going to be able to handle their tax department, I would do what I call a hybrid or a dual state. This is an AC/DC, this is a dual state. We're gonna rock this tax lien department, okay? So what I would do is this, I would have tax liens and tax deeds. Well, how can you have both, Sean? Well, what I would do is say, hey, there's gonna be a tax lien certificate where somebody can buy it, they're gonna get 18%, it's gonna be for 3 years. At the end of 3 years, county forecloses on the property and brings it to tax deed sale, and the opening bid is that person's investment plus 18%. So you've got dual, you've got deed sales going on all the time and liens going. Why would I do that? Well, if I'm selling a property that's been delinquent 1 year, immediately the county's getting that money right away. Well, let's talk about Utah. Utah is a deed state. That's what this video is all about. That means you can be delinquent 4 years before the county's gonna get any of their money. I'm gonna tell you, if I was running my business and people could buy product from me and they didn't have to pay me for 4 years, I wouldn't make it. So in an accounting world, that's actually a nightmare, okay? Because what happens is but if you look at people go, oh, well, yeah, but you're taking somebody's property. No, I'm not. If I'm doing a lien and I sell it after 1 year of delinquency, I didn't take anybody's property. I just was able to put that out to the public. The public gives me money, and when that property owner pays, it goes to that investor over there. But meanwhile, the county's got working capital. I don't know, to me that makes more sense, okay? I'm not gonna get into the politics of why they would do it one way or another, but that's it. The beautiful thing about tax liens and tax deeds, and in particular in Utah, is every county does this a little different. And I'm not gonna get political with the whole pandemic, but when the pandemic came out, I mean, the way the counties behaved to it made perfect sense to me. Because the first thing the government said is, we're gonna make this a state issue. And then the state said, okay, these are gonna be our rules. I knew exactly what was gonna happen because I've been in the tax lien and deed world for 30 years. Every county treats it differently. So I could be in whatever, Waka Waka County, some state out there, and this is how they do it. In the same state, a different county could interpret the rules completely different. Why is that a benefit? Because if they systematize this, somebody would come in there like these hedge funds and go, this is how we're gonna do it, and we're gonna monopolize this market. That's factor number one, it eliminates that. Number two, this is a big one. Every property's gotta come up individually. So as a big time investor, I can't walk in and say, I got millions of dollars and I wanna buy, that's how they talk, by the way. I got millions of dollars, I'm gonna wanna buy all the liens and get 18%, which eliminates the small people like you and I. Can't do that either. Okay, so it's really crucial to understand the matrix of this. So when I'm talking about Utah, what I'm going to talk about at the very end is every state does it a little differently. Just like there's 256 counties in Texas, every single one of them does it a little differently. So when you're looking at a state and you're looking at their rules, understand that one county can interpret it differently than the other. Well, what does that have to do with the pandemic? That's exactly what they did. So I live in Northern California, and I had a lot of people going, oh, California's locked down, isn't that? Well, not my county, okay? Because my county just said, no, we're not gonna do it this way. Whether it was right or wrong, it doesn't really matter. It's how the county interpreted the state's rules. So understanding the state's rule is crucial, but more so than ever, Utah, you gotta know how each county is gonna interpret that. We'll cover why that's so important later on. So in Utah, a property owner can be delinquent on a property for 4 years before the county takes any action. At the end of 4 years, they say enough's enough, and they have their sales in May. Okay, that's just right after April, just before June. Just in case you didn't know that. Anyway, it's gonna be in May. And so what that means is when I go in there, before it goes to sale, the county says, okay, we're selling the property. This is an owner takes all. So anybody that's got a financial interest in that property has to be notified. Remember, this is a judicial foreclosure. So what that means is they're foreclosing on the property. The difference is the tax deed takes precedence over everything. So anybody that's got a financial interest in that property is being notified. So let's say there's two loans on it from two different banks. Say Bank of America and Wells Fargo have a first and a second on that. In order for the county to bring that up for sale, they would have to notify them and say, hey, you've got 60 days, or whatever that number is in that county, to come in and pay these off. If you don't come in within that 60th day, we're having a sale that 60th day at 4 o'clock. And if you don't come in and that person buys it and pays off those taxes, you no longer have rights to the property, and that eliminates. There is no other lien or encumbrance that has the power of a tax deed. That's why I can sit here with both feet planted on the ground firmly and say you will not find a more lucrative or profitable investment strategy than tax liens or tax deeds. Now let's get back to Utah. So in Utah, they say, okay, I'm the successful bidder, boom, I own the property. Now I need to clear title. Oh, wait a second, Saen, you just said they were eliminated. Yes, they were eliminated. Okay, but I can't eliminate them from the title on it until it's gone to the sale. They had up until that hour. Once that's done, I buy it. Now the county says you're good to go, and I need to go in there and clear, uncloud, abate, whatever they call it in that particular county, and get rid of those, the appearance of those liens on the property. I couldn't have done it before because it hadn't gone to the sale. Okay, so there you go. That makes more sense on there. So now I go ahead and do that whole process. I own the property, I can sell it and make some money. Now you understand why it's so profitable. But in Utah, their list is going to come out in April. That's right after March, just before May. Not sure why I'm doing that. But anyways, so what they're going to do is that list is going to come out 30 days before the sale. Once you do your research, you determine what your max bid is, your responsibility is to go down to the sale. Now, two types of sales in Utah. There's an online sale or there's live and in-person sale. I don't have a preference to either one. It is what it is. What you need to understand in Utah is most counties will be a premium bid, which means whatever I bid on the property, if I'm the successful bidder, I win, I own the property. Some counties don't do that. Again, this is where that matrix comes. Some counties go, nope, down here, what we do, I don't know if they talk like that, but what we, I'm trying to do a Utah accent that's going to be in the South, but that doesn't make any sense. We're not in Arkansas, but whatever. Anyways, down here, we're going to do a percentage of ownership. I know, hang on to this. What they say is, what percentage of ownership are you willing to take? Interesting, huh? So let's say it's a $10,000 opening bid. I'll say, I'll take it for $10,000 and 90%. And somebody says, I'll take it for 80%. So who's ever willing to accept the lowest ownership. So in other words, when I go to sell the property, I still have to give parts of the proceeds to the former owner on it. There's a couple of states that do that, and it's kind of goofy, but it is what it is. And this is where it comes down to knowing your research, understanding how you would proceed with that. What is the best way to approach that? And this is what I've said in all my videos. Every single state has a uniqueness about it. Every county within that state has a nugget. Your job and our job to help you is to find out what that is, okay? Find out what that is, capitalize it, and take advantage and make some money on it. Listen, there is a ton you need to understand about this. And guess what? You're in luck. I've got some brand new courses on this. All you have to do is click the link down below. This is free to you, a brand new course on how to capitalize, not just on Utah, anywhere in the United States. Click the link down below. That's higginsmethod.com, and I'll send you a complimentary course that I just created just for you. This is Saen Higgins saying God bless and good luck.